Good morning to all the viewers. So last session we had a discussion on scrutiny assessment and best judgment assessment. In today's session we are going to discuss two more assessments, income escaping assessment and search assessment. So now let me begin with the income escaping assessment first. First, let us learn the difference between income escaping assessment and scrutiny assessment. Actually, after the return of income is filed by the SSC, then in some cases notice under section 143(2) scrutiny notice will be issued and assessment will be completed under section 143(3). But in case this scrutiny time limit has been expired, when the scrutiny time limit expires within 6 months from end of year in which return of income is filed, within 6 months from the end of the year in which return of income is filed. So after filing return of income, scrutiny notice will be issued in certain cases based on risk based criteria. This has to be issued within 6 months from the end of the year in which return is filed. And if this scrutiny time limit expires, first thing to be noted here is expiry of the scrutiny time limit. When the scrutiny time limit expires, but in certain case SSC has understated the income, SSC has understated the income or claimed excessive losses or claimed excessive depreciation or allowance. These are all part of the escaped income only. Sir, first what do you mean by the term escaped income? Whenever SSC income has exceeded basic exemption limit, but SSC has not disclosed certain incomes in the return of income, or he has claimed excessive losses or excessive depreciation, then it is called as income escaping. First let me define the term income escaping. First, here is the meaning of income escaping assessment. What do you mean by the term income escape? After learning the term income escape, then let us discuss the procedure relating to income escaping assessment. Point number 1, when no return is filed by the SSC, if SSC does not file any return of income, but if income exceeds basic exemption limit, it is called as income escaping. Generally, if SSC does not file his return of income, notice will be issued under section 142 subsection 1. But what is the difference between 142 subsection 1 and notice income escaping assessment notice under section 148 is 142(1) will be issued without any reason to believe that SSC has escaped the income. Assessing officer is not assured that SSC's income has exceeded basic exemption limit. In such a case, to know the reasons, assessing officer shall issue notice under section 142 subsection 1. There, assessing officer does not have reason to believe that income has escaped. But here, assessing officer has clear information that SSC has escaped the assessment. Let me take an example. SSC has sold a building where capital gain arises, and such capital gain has not been disclosed in the return of income, or return of income is not filed by the SSC. In such a case, since there is a reason to believe in annual financial return, that means statement of financial transactions, sub-registrar office has submitted that this person holding PAN number has sold the property for 70 lakhs. In statement of financial transaction, the information is available, but the return has not been filed by the SSC. Either gain or loss must be disclosed by filing return of income, but he has not filed his return of income. So assessing officer shall issue notice under section 148 that your income has escaped the assessment. Sir, first let us learn the meaning of the term income escaping. Coming to first part, when no return has been filed by the SSC, when the income has exceeded basic exemption limit, then it is called as income escaping. Coming to second term, when SSE had filed a return of income, when SSE has filed his return of income, then when he is said to be income escaped, when he has understated the income, if he has shown lower income, or he have claimed excessive losses, or deduction, allowance, relief, if he has claimed excessive in the return of income, then it is called as income escaping. Okay. And next, already scrutiny assessment is also completed. Sir, whether completed scrutiny assessment can be reopened again? Answer is yes, by way of issuing notice under section 148 income escaping assessment. Even though the scrutiny assessment is completed, then again assessing officer can reopen the case using section 148. When he can open? When the assessment, when the scrutiny assessment made at a lower rate, even the SSE is taxable at higher income, lower income has been assessed, or excessive relief is allowed, or excessive loss or depreciation is allowed. Sir, if this is a mistake, then rectification under section 154 is enough. But assessment itself is made on a undetected false facts. Assessment itself has been completed, but the assessment is completed on false or undetected facts, then it is called as income escaping. Sir, first we are going to learn the meaning of the term income escaping. Now coming to point number 4, if SSE has international transactions and a report from chartered accountant must be obtained in form 3CEB. In this form, they need to obtain a report from chartered accountant that arm's length price transaction has been correctly computed. But if they do not submit that report under section 92E, if SSE failed to submit the report, this is also called as income escaping. And point number 5, when asset is located outside India, the thing to be noticed here is when asset is located outside India, generally at the time of filing return by residents, at the time of filing return by a resident, if the resident of India has any assets located outside India, a resident of India, if they have any assets located outside India, those asset details including foreign bank account details must be disclosed in the return of income. Must be disclosed in the return of income. If they do not disclose the details of the foreign assets in the return of income, then it is also called as income escaping assessment. So like this we have 5 modes, 1, 2, 3, 4, 5. Like this 5 transactions have been specified. Sir, what is the thing in case of income escaping? Okay, in these 5 circumstances there is escapement of income. That means SSE has paid low tax. In this case, what the assessing officer is going to do? Whenever there is a scope for income escaping, they need to issue notice under section 148. When they have to issue this notice? When scrutiny time limit has been expired. When assessing officer has noticed that there is certain income which has been escaped from tax and scrutiny time limit has not expired, then notice under 148 cannot be issued. If scrutiny time limit exists, then notice must be issued under section 143 subsection 2 only. When scrutiny time limit expires, but still SSE has escaped income, in such a case they can issue notice under section 148. So I think this difference is very clear. So notice under section 143(2) is irrespective of reason to believe. One SSE has disclosed all the transactions in a correct manner, whether his case may be selected for scrutiny. Yes, for the purpose of scrutiny, assessing officer need not have any reason to believe that income has escaped the assessment. But after the expiry of the scrutiny time limit, if assessing officer have reason to believe, sir, the thing I am using to use terminology here is not reason to suspect. I am using here the term reason to believe. Let me show you here. Whenever the assessing officer should serve a notice on the SSE, before issuance of notice, he shall have a record for the reasons therefore. The term that was specified here is he must have a record. That means the reason to believe should exist. Sir, what is the difference between reason to suspect and reason to believe? Reason to suspect means just there is a doubt on the SSC. Here doubt is not the criteria. It has to be assured. When he has reason to believe, there must be evidence that SSC has escaped the assessment. Let me take an example. If in statement of financial transaction, the sub-registrar office has submitted that a person bearing PAN number has sold the property for 10 lakhs, sorry, for 70 lakhs. In such a case, such a transaction has been reported in SFT. Seller PAN and buyer PAN both were available in the agreement. Now, such a seller PAN, he has to offer income under the head capital gain. But if he has not offered income under the head capital gain or business income, whatever may be, he can offer it. But he has neither offered the income under the head capital gain or neither offered income under the head PGBP. In such a case, so even though information is available with the department, such information is compared with the return filed and nothing has been disclosed. That means SSC has understated the income. When there is understatement of income, in such a case, this income escaping assessment notice can be issued. So I think this provision is very clear. So whenever scrutiny time limit expires, the thing that to be noted here is, if scrutiny time limit expires, but SSC has understated the income, losses are, sir, if scrutiny time limit is available, assessing officer can select this case for scrutiny only, because it may be a scrutiny assessment, income escaping assessment, stretch assessment. Whatever may be the type of assessment, ultimately we are going to compute total income only. So if scrutiny time limit is left, then scrutiny notice should only be issued. If scrutiny time limit is expired, then income escaping assessment notice can be issued under section 148 is the conclusion. Okay. So now by this we have known what do we mean by the term income escaping assessment. Now before issuance of notice by the assessing officer, he has to take the approval. This sanction is not required in case of scrutiny notice. For issuing notice under section 143 subsection 2, sanction of notice is not required. But for issuing notice under section 148, income escaping assessment, our jurisdiction officer, in order to issue income escaping assessment notice, it requires the sanction of the higher officers. It requires the sanction of the higher officers. Sir, what do you mean by the term higher officers? Before concluding this issue, first let me present out the hierarchy of income tax department. Here is the hierarchy of income tax department. I am going to present it to you. Based on this, you should also automatically understand the whose approval is required in case of issuing income escaping assessment notice. Here if you listen, CBDT is the highest authority that was presented here. Before CBDT, below CBDT, first if you refer, Principal Chief Commissioner of Income Tax. Directorate department is to deal with such assessment, and Commissioner department is to deal with this income escaping assessment, scrutiny assessment. So they have divided the categories based on the SSC's type of assessment. There is a separate directorate wing and there is also separate commissionerate wing. So coming to commissionerate wing hierarchy, Principal Chief Commissioner of Income Tax or Chief Commissioner of Income Tax. So let me present out much more in an easy manner to you. So CBDT is the highest authority. So below CBDT, Principal Chief Commissioner of Income Tax or Chief Commissioner of Income Tax. Below him, Commissioner of Income Tax. Below Commissioner of Income Tax, Additional CIT, Joint Commissioner, Deputy Commissioner, Assistant Commissioner, ITO. Okay. So among them, these 5 are the assessing officers. If you refer definition of the term assessing officer in section 2, from beginning with additional CIT to ITO, they are called as the assessing officers. These assessing officers, if scrutiny time limit has been expired and there is understatement of income, in such a case, these assessing officers can issue notice under section 148 for income escaping assessment only if sanction required by the higher officials. Now let us learn meaning of the term sanction, whose approval they require. So if you observe here, if notice is to be issued by assessing officer below the rank of the joint commissioner. That means this DCIT, assistant CIT, ITO. If these three officers want to issue notice under section 148, they require the approval of the JCIT. They require the approval of the JCIT. Okay. So this is the first thing to be noticed. And coming to second point, after let me discuss regarding this 4 assessment years. If assessing officer below the rank of the joint commissioner is to issue notice, they have to take the approval of the JCIT. Okay. And what about this 4 years and after 4 years? Generally, there must be a time limit for issuance of notice. Scrutiny notice, we have discussed that notice has to be issued within 6 months from the end of the year in which return has been filed. Now, coming to this income escaping assessment, notice has to be issued within 4 assessment years when the escaped income does not exceed 1 lakh. When the escaped income does not exceed 1 lakh, when the escaped income is less than 1 lakh, then notice must be issued within 4 assessment years. Let me take an example. Assessment year 16-17, SSC has certain income escaped from tax. The notice relating to this assessment year 16-17 has to be issued by 31st March 2021, because from the end of this assessment year 31st March 2017, the notice has to be issued within 4 years. From the end of assessment year 16-17, notice has to be issued within 4 years, which comes to 31st March 2021. So this is the criteria to be learned here. Before this date, notice must be issued. Sir, if you learn the difference between 143 scrutiny notice and 148, scrutiny notice within 6 months from the end of the financial in which return has been filed, scrutiny notice must be served. But coming to income escaping assessment, here notice is to be issued rather than serving by the end of this 4 assessment years. If the escaped income is below 1 lakh, notice has to be issued before the end of the 4 assessment years. Here notice must be issued, whereas in case of scrutiny it must be served. What is the difference between issue and serve? Issue means on part of the assessing officer he has to issue. Served means it has to be reached to the SSC also. So coming to income escaping assessment, notice has to be issued within 4 assessment years if escaped income is less than 1 lakh. But if escaped income has exceeded 1 lakh, notice can be issued for 6 assessment years. If escaped income has exceeded 1 lakh, notice can be issued at any time within 6 assessment years. That means regarding this assessment year, notice can be issued within 30th March 2023 if escaped income has exceeded 1 lakh. So finally I am going to give you conclusion here is, if escaped income does not exceed 1 lakh, then notice must be issued within 4 years. In such a case, officer below the rank of JCIT is required to take the approval of the JCIT, and officer of JCIT and above, they need not require any approval. They can issue directly without any approvals. If you refer here in our hierarchy, these 3 officers, in order to issue 148 notice, they require the approval of JCIT. What about these 2 officers? These 2 officers, they can issue themselves. They need not take approval of any person. If notice is issued within 4 years, but if notice is to be issued after 4 years, if you remember, greater than 1 lakh, notice can be issued up to 6 years. Like that, if notice is to be issued after 4 years, here the thing that was specified here is they required to take the approval of principal chief commissioner, any of the officer. These 5 officers, if they need to issue notice where the time period has exceeded 4 assessment years, then they require the approval of these officers. So I think this hierarchy is very clear. Let me present you one more time. If notice is to be issued, generally if the escaped income does not exceed 1 lakh. In such a case, notice has to be issued up to 4 assessment years only. And if escaped income is 1 lakh or more, then notice can be issued from 4 to 6 assessment years. And if escaped income relates to the asset located outside India, notice can be issued up to 16 assessment years. So SSEs who are going to purchase foreign assets out of Indian income have to maintain their books of accounts for 16 assessment years, because there is a scope to issue notice up to 16 assessment years. So the term to be discussed here is time limit for issuance of notice. So here first thing that was prescribed here is up to 4 years we have a chance irrespective of limit. If you want to go up to 6 years, escaped income should exceed 1 lakh minimum. In case of foreign assets, notice can be issued up to 16 assessment years. Okay. So for that sake, before issuance of notice, whose approval they are required to take, the officer is required to take the approval from these officers. Officer below the rank of joint commissioner has to obtain the approval of the joint commissioner. And if notice is to be issued beyond 4 years, that means within 6 years, in such a case, they require the approval of the principal chief commissioner or commissioner is the conclusion. So I think this provision is very clear. This is sanction for issuing notice, and this is the time limit for issuing notice. Now we have learned when the notice is to be issued, when there is income escaping assessment. We have learned the meaning of the term income escaping. 5 categories I have divided income escaping, and we have learned the meaning of the terms. And coming to number 2, second point, what is the time limit for issuing notice? And next point, whose approval they have to take them. And after taking the approval, now the notice can be issued under section 148. So the assessing officer should serve a notice on the SSE requiring him to furnish the return of income. This is the important aspect to be learned. Now SSE is again required to file his return of income. Even though SSE has earlier filed his return of income under section 139, now again he is required to file his return of income under section 148. From ITR 1 to 7, same forms only. His applicable form has to be selected, but return filing section will be different. Generally we are going to file return of income using section 139, but now here we are going to use section 148. We are going to select section 148 and file our return of income. The assessing officer should serve the notice on the SSE requiring him to furnish the return of income within the prescribed period. The prescribed period that was given generally is 30 days time or 35 days time, whatever may be. They are going to give time period to the SSE to file his return of income. Even the SSE has earlier filed his return of income, now again upon issuance of income escaping assessment notice, SSE is required to furnish return of income again. Same ITR forms, but now the thing to be remembered is SSE should disclose such escaped income also. Earlier he has disclosed voluntarily his income, but if there is income escaping, if assessing officer issues notice under section 148, in such a case, now SSE at the time of filing his return of income, along with earlier particulars, now such escaped income should also be disclosed. Sir, whether there is any separate column to disclose? No. Same head of income, salary, house property, PGBP, capital gain or other sources. Whatever may be, in the same head of income, you show it as income and file your return of income paying appropriate taxes. And after filing your return of income, now the assessment process starts. Sir, first we need to get notice from the assessing officer under section 148. Now, let me present here notice under section 148 to you. So, you once go through this notice, and now I will put on 2 points to be remembered here. So, just this is a sample notice. First, once you go through this notice, this is a notice given by the assessing officer to one of the SSE. Once you go through this notice, then I will present you 2 important points to be observed in the notice issued under section 148. What are the points to be noted in this notice? So I will present it to you. Once get a reading of such notice once. Sir, the thing that was presented here is, I have reason to believe. Who is issuing this notice? Notice under section 148 will be issued by our assessing officer. Our assessing officer is going to write in the notice that I have reason to believe that your income chargeable to income tax for assessment year 1011, this is just an example, for assessment year 1011 has escaped the assessment within the meaning of section 147. What is the meaning of the term income escaping? In the beginning of this video, I have discussed 5 categories relating to income escaping, whereas I have reason to believe that income chargeable has escaped the assessment. Therefore, I propose to assess or reassess or recompute loss or depreciation, and you are hereby required. Sir, this is the practical notice which is issued, and I am going to deal with that case. So you are hereby required to deliver me before the expiry of 30 days a return of income in prescribed form. It may be ITR 127, whatever may be. Your applicable form has to be selected, and you are required to file your return of income. This notice is being issued after obtaining necessary administrative approval of, I have already specified you that they requires a sanction approval. So after whose approval this notice is being issued is being presented here. So in continuation of our discussion, sir, if you remember, the thing to be noted here is number 1, reason to believe. Number 2, escaped the assessment. Okay. Number 3, file your return of income. Number 4, sanction. These 4 things to be remembered in this notice. First thing, I am going to specify you that your income chargeable has escaped the assessment. Actually, SSC has not offered the income under the head capital gain. A land, normal vacant land, is being sold for 1 crore. After computing capital gain, the long term capital gain tax would come to around, example, 5 lakhs. For example, tax payable is 5 lakhs. In this case, SSC has not disclosed this long term capital gain at all in his return of income. Assessing officer have come to know that he has sold this property in statement of financial transaction filed by the sub-register office. Sir, I am going to present you with a practical example. Sub-register office has submitted documents, has submitted written that an SSC with this PAN number has sold the property for 1 crore. And that SSC has neither disclosed in the return of income, nor it is not an exempt income also. This is not an agricultural land also. This is a normal vacant land sold by the SSC where capital gain has arisen. But SSC has not disclosed it in the return of income. Now, if scrutiny time limit expires, now AO can issue notice under this section 148. 148 notice can be issued now. But assessing officer should have reason to believe. Whether this SFT can be considered as reason to believe? Yes. And he has to take the approval of the commissioner. Yes, he has obtained the approval. Then notice can be issued, but this reason to believe should be in the record of the assessing officer, but need not be disclosed to the SSC. This need not be disclosed to the SSC. This is the important point to be remembered. This need not be disclosed to the SSC. If you refer here, in this case, actually capital gain SSC has not offered it as income. But if you refer the terminology used in this notice, I have reason to believe that your income chargeable to income tax has escaped. Which income has escaped? You have not offered capital gains. That reason will not be disclosed by the assessing officer in notice under 148. In 148 notice, reason will not be disclosed. Okay. That reason will be in the record of the officer, but that reason will not be disclosed directly. Then how can SSC know that this income has escaped the assessment? Sir, SSC is the person who has earned the income. Doesn't he know how much income he has earned in that year? SSC knows it. SSC has to disclose all those incomes. After receiving this notice, for example, if this notice is received by Mr. A, now what Mr. A is going to think that he is trying to remember, let me take an example that this is relating to assessment year 17-18. Okay, this is relating to assessment year 17-18 in my example. So he is trying to remember, I have received notice for income escaping. What are the incomes I have not disclosed in the return of income? Now SSE is thinking of it. And he has remembered that there is a capital gain on sale of property. Okay. And along with that, he has also not disclosed certain commissions received from manufacturer. Some manufacturers has given a credit note. He has not disclosed it as income. And he has also has capital gain. From assessing officer point of view, in record there is only capital gain. But from SSE point of view, he has capital gain and commission. Both were not disclosed in the return of income. After receiving this notice, do SSE know what is in the record of the officer? SSE don't know what is in the record of the officer. So what the SSE is going to do now is offer both the incomes. This is what the department requires. If department clearly states the reason for income escaping also, since you have not disclosed capital gain, if this reason is disclosed in this notice, then SSE will be restricted only to that income. If there are any other incomes which are chargeable to tax, he will not disclose them. So what the department is going to do here in this case is, when SSE may have any other incomes which might not come to the notice of the department. So for that cause only, department will not state the reason. They will just state that we have reason to believe. But what is that reason? It will not be disclosed in the notice. It will not be disclosed in the notice. SSE himself has to remember the escaped incomes and he has to disclose those incomes and file again return of income under section 148, not under section 139. Now he has to show it as section 148 and file the return of income. Okay, so up to this extent our concept is completed. Now SSE is going to file return within 30 days time period has been given here. So SSE is going to file his return of income. So here in note point they have specified that if you observe, assistant commissioner has given this notice. In case you feel any difficulty in obtaining the return form applicable, as of now there is no difficulty because everything is to be filed through online only. So there is no difficulty in obtaining the form. So now the return has to be filed under section 148. Sir, is the assessment procedure completed? No. Now it is going to begin. Sir, if you refer, I am presenting you income escaping assessment procedure in a detailed manner. First we have learned the meaning of income escaping assessment. Okay, and then if AO has reason to believe, then AO takes approval. He has taken the approval of the assistant commissioner and issue notice under section 148 to file the return of income within specified period. They have specified here as 30 days. Okay, now what the SSE is required to do? He is required to file the return of income attaching this notice under section 148. If you select section 148, it asks in CPC in online at the time of filing, it is going to ask the attachment of the notice under section 148. If we attach such notice and we can file the return of income. Now the procedure starts. Up to here SSE duty is completed. Now begins the duty of the assessing officer. Now AO shall assess. Now AO shall assess or reassess such income. AO shall assess such income plus any other income. Here such income means in the record of the officer. Other income means additional income offered by the SSE. In my case, SSE has capital gain and also commission. Capital gain is in the record of the department, but SSE has also offered additional commission income also. Now whether assessing officer can assess this commission? Yes. Even though the reason to believe has not been recorded, only capital gain is been recorded by the officer. Even though this commission income is not been recorded, it has to be assessed. Whenever additional incomes comes, those can also be assessed, because if you refer here plus, the term used there is and. They can also assess, and has been used there, they can also assess the other incomes is the conclusion. So what is the time limit prescribed for completion of this assessment? Now let us go through it. we come back to our presentation, so first here, issuance of notice. SC officer shall issue notice, but they need not communicate to the SSC reasons. This is what I have said to you. They can issue the notice, but in notice they will not give reasons. If you refer here, the reason to believe has been specified, but what is the reason has not been specified here. So in these cases, assessing officer need not communicate the reasons for initiation of proceedings. Now SSC is required to file the written. If he is not going to file written of income, then prosecution proceedings might also be initiated generally. But how much is the prosecution, 6 years or 3 months, it may be the criteria of the officer, and there is no requirement to state the reasons. The reason that capital gain has been escaped, that reason need not be communicated. Just officer is going to quote in the notice that there is we have reason to believe that your income has escaped assessment. That reason need not be communicated is the conclusion. Now what they are going to do? After filing return of income by the SSC, income escaping assessment now begins. Sir, notice is issued under section 148, assessment is being done under section 147. Applicability: where AO has reason to believe that income chargeable has escaped assessment, he may assess or reassess or recompute the loss. And if you see here, the AO may assess the income in respect of which in the course of proceedings even such reasons have not been included. He can also assess other income which comes to his notice even though it was not recorded. So in my example, along with capital gain, if SSC offers commission, such commission income also can be assessed by the officer is the conclusion. Okay. And next, coming to the other thing, time limits for completing the assessment. When this income escaping assessment should get completed? Sir, now if the notice is issued on or after 1/4/2019, now we are in March 2020. If notice is issued on or after 1/4/2019, last year, then within 12 months the assessment has to be completed from the end of the year in which notice is received. Within 12 months the assessment should be completed. And if the notice is issued before 1/4/2019, then the time limit for completing the assessment here that was specified is 9 months. So I think you have noticed the difference between this 9 months and 12 months. If notice is issued before 1/4/2019, assessment should be completed within 9 months. Later, the assessment should be completed within 12 months. And if international transaction exists, an additional time period of 12 more months will be given to the SSC is the conclusion. So here we have completed time limits. Now coming to the special points, these special points were applicable in practice to all the chartered accountants. Number 1, if the income involving matters which are a subject matter of appeal, reference or revision, if the matter is in appeal, such appeal matters cannot be dealt by way of income escaping assessment. Appeal and revision proceedings cannot be dealt by way of income escaping assessment. And notice to non-resident, if you know, foreign asset details were not disclosed in the return, notice can be issued up to 16 assessment years. Now in past I have discussed the time limits also. 16 assessment years before notice can be issued. But here the thing to be noticed here is, if notice is to be issued to the agent of the non-resident, within 6 years only we need to issue. If notice is to be issued directly to non-resident, then we can issue within 16 assessment years. Very simple thing, whether the notice is to be issued to agent or whether the notice is to be issued to non-resident comes to the conclusion in this case. And coming to third point, restriction of 4 years and 6 years does not apply when there is any appeal reference. In such a case I have already concluded that it should not be considered. And restriction of time limit, when already scrutiny assessment and income escaping assessment is completed based on false facts, then also income can be reassessed. The closed proceedings, closed scrutiny assessment can be reopened by way of income escaping assessment if the assessment is been completed on false or undetected facts. Okay. Next, SSC can ask to drop the assessment. SSC can ask to drop the assessment. When SSC can ask for drop the assessment, if the income which has escaped income has already been taken into account. when there is no income escaping assessment from viewpoint of SSE. Actually, SSE has sold the building. This building is the stock in trade and disclosed it under the head sale. But assessing officer is of a denotion that this is a capital asset and you have to offer under the head capital gain. If it is shown under the head capital gain, okay, it can be easily observed by the officer. But SSE has included this in business income and it is correct on part of SSE also. SSE shall explain this to the assessing officer and this proceeding can be dropped by the assessing officer if the reason to believe with the assessing officer is already disclosed by the SSE. It may be disclosed in further years, it may be disclosed in past years, whatever may be. What the SSE is going to denote that, sir, you have issued to me income escaping assessment, but all the incomes I have already disclosed. But your interpretation is to offer under the head capital gain, but we have offered it under the head income from PGBP. So please drop the proceedings. The notice is invalid. SSE can request a officer to drop the assessment also. It is the right of the SSE is been concluded here. So this was the topic regarding income escaping assessment. So let me present it in a step-by-step manner. Sir, here first we need to learn the meaning of the term income escaping. When assessment has been done where there is understatement of income or excessive claiming of losses, in such a case income escaping assessment notice will be issued. Assessing officer should have reason to believe. It must be recorded in writing. Then he takes the approval of the higher officials and issues notice to file return of income. If SSE files, then assessment will get completed. But if SSE does not file the return of income, then best judgment assessment under section 144 will be made. What do you mean by the term best judgment assessment? In last session we have discussed when notice was issued but SSE does not respond to such notice, then in my example this capital gain will be treated as income and the tax rate demand notice will be issued to the SSE. When if SSE does not file his return of income after issuing notice under section 148, in such a case best judgment assessment shall be made is the conclusion. Okay. Now we have completed income escaping assessment. Next let us enter for stretch assessment. Before entering into stretch assessment, here there are certain queries which were raised regarding income escaping. Let us first solve them and then let me enter for income escaping assessment. First beginning with, sir, is power of attorney required to show that house sold as power of attorney in case of NRI in his return of income or has to be shown in non-resident SSE? Sir, whenever a property is being sold in document, we need to clearly mention that based on GPA this property is being sold. If you do not mention such clauses, it may be come into point that the agent on his own has sold the property. So whenever you are going to sell the property based on GPA, it needs to compulsorily disclosed in the document is the conclusion. And next thing, even though the PAN of the attorney is being showed, here PAN of the non-resident should also be disclosed. If PAN is not available to the non-resident, at least his tax identification number of foreign country should be disclosed or passport number should be disclosed. So even though the document bears PAN of the power of attorney, if notice is issued to the power of attorney holder, we can approach based on section 152 to the assessing officer that I am not the person who has sold the property. On behalf of a non-resident, I have sold the property. If SSE discloses these facts, then I have already specified in section 152 to SSE have right to ask the officer to adopt the proceedings. Now proceedings may be commenced in the hands of non-resident if he has not disclosed the incomes. Okay. Next, is there any requirement that in case main reason recorded was quashed and AO found any other things to be added, whether he can add? Yes, the main thing if it was clashed. Sir, in 2015 there is a Andhra Pradesh High Court judgment regarding ITO versus Govindaraju case in 2015 and another case Meher Finvestment Limited. Meher Finvest Limited. These two cases you can take it as reference. MEHER, Meher Finvest Limited and N Govindaraju case. In these two cases, what they have given conclusion is even though original reason, in this case capital gain, is the reason of the assessing officer. If that reason is quashed, if that reason does not exist, finally they have come to know that this capital gain is not of this assessee. And if they have found out any other incomes, whether such other incomes can be assessed, answer is yes, it can be assessed. If this other income pertains to another assessment year, then fresh notice must be issued. But if it pertains to the same assessment year, then even though original reason has been quashed, the other incomes were eligible for assessment is the conclusion. Okay. And next thing here is, sir, we are facing a problem on understanding section 150 and 151 time limits. Okay. Sir, 151 is the sanction for approval of the notice. 151 is the sanction for approval. So, before 4 years, whose approval is required? After 4 years to issue, whose approval is required? It is section 151. Okay. But section 150, within which time the notice is to be issued? Let me once again show it to you. Sir, this is the time limit for issuing notice, whether to be issued within 4 years, 4 to 6 years, or 4 to 16 years. This is the time limit for issuing notice. This is the sanction for issuing notice, whose approval must be obtained. Up to 4 years, if notice is to be issued within 4 years, whose approval is required? After 4 years, whose approval is required is presented here. So both were different from each other. Okay. And next coming, sir, what if reason for notice, there is no escaped income, but however there is addition? The same thing already I have specified to you. The same question is being asked here. Even though original reason has been dropped and fresh items were added, whether this assessment is valid? Yes, this is a valid assessment. Two cases I am going to refer to you, Mehak Finvestment Limited and number 2 Govindaraju case. In these two cases, the thing that was concluded here is, earlier in Ranbaxy Laboratories case in 2009, if you remember, there is a case called Ranbaxy Laboratories case, where they have concluded that unless original reason exists, new items should not be added. But in 2015, two cases were there, Meher Finvestment Limited and N Govindaraju case, where they have concluded that even though original items dropped, fresh items can be added is the conclusion. So I think that query was solved. And will section 150, 131 and 153A notice will deemed under 148 notice? Sir, let me discuss 153A also. Next in stretch assessment we will get, and it will be automatically solved to you there. What is 139? Sir, 139.9 is nothing but defective return. Defective return means all the columns were not filled in the return of income. Defective return is completely different from income escaping assessment. So defective return can be rectified immediately by giving response to notice under 139.9, whereas income escaping is totally a different thing to be noticed. Okay. And income of capital gain is subject to exemption under 54 EC is not disclosed in ITR, as tax liability is 0. Will it amount to income escaping assessment? Yes, sir. Any exemption, any deduction has to be disclosed in the return. Unless disclosed in the return, it is not available to you. Now, so with effect from assessment year, let me remember you once again. I will disclose you this section also. Very important aspect. Let me present to all of you, because this matter is very useful to all the persons. When SSE has exemptions under section 54, whether return has to be filed is the query that was raised. So let me present it to you. Based on section 139, it has clearly disclosed that such exemptions under section 54, before giving such exemptions, here income has to be considered. Let me show it to you. Section 139, voluntary filing of return of income. Here if you observe, So here is this is the bare act in Income Tax India e-filing website. If the total income of any person without giving effect to, if you observe the term here, without giving effect to section 54, if you observe here, here is your query, section 54 EC. So the question that was asked here is, in this case, if 54 EC is not disclosed in ITR, whether it amounts to income escaping assessment? Yes. Before giving exemption under 54 EC, you need to compute your income, and if it exceeds basic exemption, you have to file your return of income. But you have not filed it, it amounts to escapement. But there is no problem to you. Now you file your return of income after issuing notice under 148. Now you file your return of income claiming that exemption also, that exemption is eligible. If your case is selected for income escaping, there is no additional benefit to the officer. But from your point of view, it amounts to escapement if you do not disclose the facts. Okay. Next. Okay. Coming to other facts. Sir, once can you explain about mutual fund? Sir, that's a different aspect. Now we are going to discuss regarding income escaping assessment. Please explain section 9 in detail. Sir, you can refer day 1 of our session. In day 1, I have already disclosed all the basic concepts regarding section 9 income deemed to be accrued also. You can go through it. So whether section 50C applicable if sale cum GPA holder registered the property in his own name subsequently if he paid consideration by way of cash before the date of GPA. Yes. Sir, if GPA holder has purchased the property, then automatically the capital gain arises initially only. It has to be disclosed. Okay. And next, sir, whether there is a development agreement between landlord and developer, they shared flats between them, but no sale consideration. Based on stamp duty value, whether department can issue notice to the landlord. It was completely correct on point of view of the assessing officer to issue notice. In case of development agreement, the landlord, even though cash has not been received, indirectly flats were received. It has to be treated as income. Joint development agreement, you can refer our capital gain session. There I have completely explained in detail regarding joint development agreement in one of the special case. You have to offer it as income based on stamp duty value. If you have not offered it as income, then income escaping assessment notice can be issued. Okay. Next, whether without any monetary benefit. Yes, even though monetary benefit does not exist, you have to disclose based on stamp duty value. Sir, in house property, as per amendment, if stock in trade remain unsold, rental income unsold will be treated under the head house property from 3rd year onwards. Yes, from 3rd year onwards, in case of house property, income has to be offered. Next, it pertains to assessment year 13-14. Yes, in joint development agreement they are asking. Yes, even though, sir, notice has to be issued within 6 assessment years. So you need to check if today you are going to receive notice regarding assessment 13-14, whether it is valid. No. Assessment 13-14, 6 years means 31st March 2020, the time period of 6 years was completed. So today is 16th May. If today the notice is issued regarding assessment 13-14, it is invalid. If it was issued before 31st March 2020, the notice is valid. Can assessee suo motu went to AO for assessing income? In case if he has not filed the return of income, okay, he can suo motu go to the officer and specify him that I have not filed my return. So please give notice under 148, whether SEC can directly state to the assessing officer, yes, it is asset disclosure. He can state and he can himself specify the reason to believe, and assessing officer, if he issues the notice under 148, now SEC can file the return. Will penalty be applicable for additional income disclosed after receiving notice under 148? Yes, sir, generally section 270A, in original return filed by SSE itself, all the incomes must be disclosed. If you are not disclosing, then penalty under section 270A will be levied, but not must. It is at the discretion of the officer. At least in now, if you are going in the return that you are going to file, if you disclose all the incomes, then assessing officer may take a concern to reduce the penalty. But next, can assessee suo motu was completed. Next, AO has completed the assessment for assessment 13-14. Okay, that means already assessment was completed. Whether AO can send notice under 148 after taking appropriate approval from DCIT, what will be the time limit for the same? Sir, in your case, you have already specified that assessment has been completed in 13-14, assessment 13-14. Sir, the thing I need to get clarification here is which assessment year. If notice itself relates to assessment year 13-14, this time limit of 6 years, before 6 years they can issue. Even though completed assessments also can be reopened. But you have to remember here is, if your first assessment is made based on false or undetected facts, in such a case, notice can be issued. The 6 years, 4 years limit to be computed from the end of the assessment year, but not from the end of the earlier assessment order. So from that assessment year ending, you need to check it. Okay. And next, suppose the sold party, I think the sold person under ULC, register kept pending. Registration, can it amount to capital gain out of sale? So what do you mean by the term ULC? It was not clarified. Okay, the thing I am going to specify you that, sir, registration is not the criteria. Agreement is the criteria. If sale agreement has been executed before 31st March and possession has been handed over, sale agreement executed before 31st March and possession has been handed over, in such a case, the seller has to offer income under the head capital gain. If he does not offer, it shall amount to income escaping only. As per announcement of Finance Minister before few days, the time limit were increased by 3 months. Yes. Can AO will issue notice under section 148 for assessment 13-14 till 30th June 2020? Yes. Since the time limits were enhanced by 3 months, now notice can be issued before 30th June 2020. Yes, the time limit have been enhanced. So by this, the queries that were raised, urban agricultural land ceiling limit is not the criteria. The thing to be remembered here is, if registration has not been completed also, if possession has been transferred, it has to be offered as the income. Can landowner claim exemption under 54F against plat allotted by builder upon completion of construction after 2 years without depositing any amount in capital gain scheme? Yes, capital gain scheme exists when consideration is received by way of cash or online transfers. Consideration if it is received, then it has to be deposited. In case of development agreement, since consideration will not be received, 54F exemption can be claimed. Only in respect of 2 properties only in total, you can claim exemption under section 54F. Okay. So by this, all the queries that were raised till now have been solved. And now let me enter for next assessment in stretch assessment. Now let us come for stretch assessment. Okay. Now beginning with the stretch assessment, the thing to be noticed here is what are the circumstances of stretch and seizure. Here also, like income escaping assessment, first let me specify the procedure first and then let me enter into the assessment. For the first 1 hour we have focused on this income escaping assessment. Now we are going to focus on stretch assessment. Sir, in case of stretch assessment, first let me come to the procedure. First question to be answered here is, what are the circumstances why the assessing officer is going to execute stretch assessment? Okay, this is the first thing to be noted here. Now let me clarification. Each aspect I will clarify to you. Number 1, here also they must have reason to believe. Without any reason to believe, they cannot go for stretch. Based on reason to suspect is not the criteria. Reason to believe is only criteria here. So when reason to believe exists, in such a case they can go for the assessment. Okay. So a person who has not complied with the notice under section 131 subsection 1. Sir, 131 subsection 1 means nothing but someone issued to the SSE, or 142 subsection 1 notice has not been complied, then department can come for such assessment. 142 subsection 1 notice, if you remember, for non-filing of return of income, SSE might receive this notice. For that notice, if SSE do not reply, there is a chance for coming to such assessment. I am not going to specify you that they shall compulsorily come for such assessment. There is a chance for coming from such assessment is the conclusion I am going to give it to you. And main thing to be noticed is, generally if they have undisclosed income or properties, generally if they have undisclosed income or properties, then such assessment shall be made. How much undisclosed income should exist? There is no criteria specified in Income Tax Act that if 10 lakhs exceeds, 20 lakhs exceeds, like that, nothing limit has been specified in Income Tax Act, but there may be based on internal circulars of department. But here I am going to specify you that when there is undisclosed income or property, then they can come for such assessment. It may be money, bullion, jewelry, whatever may be. If they have reason to believe, then they can come for such assessment. So by this first point has been completed. Sir, I am going to discuss you in a procedure up to here. The stretch procedure begins with circumstance, and then up to penalty we are going to discuss in a detailed manner. Second step is authorization, stretch warrant. Stretch warrant means it requires the approval of the higher officers. So these are the officers who can come for stretch. These are the officers who can approve for stretch. So what the stretch officials are required to do is, first they are required to take the approval of this authorizing officials, and then after obtaining the approval of authorizing officials, the authorized officials can go for stretch. Sir, these officers will do stretch by taking the approval of these officers. Very simple understanding this was. Okay. So finally the thing to be noted here is, first there must be circumstance, reason to believe. Okay. And number two, they can issue authorization for stretch. Stretch warrant can be issued. And after that stretch warrant, now the officer conducts the stretch. What is the procedure for conducting the stretch? Let me now discuss it. Powers of the authorized officers. Authorized officers, sir, this is the power. It is at their discretion whether this power has to be exercised or not. There is a difference between power and duty. Duty is mandatory, it is the obligation, whereas power is at the discretion of the assessing officer. Okay. So now coming to this, the authorized officer has power to enter any building which is specified in the stretch warrant. Stretch warrant contains the premises where stretch is to be conducted. Unless specified in stretch warrant, for other place they cannot go for stretch. So enter any building, they can break open the lock of any door if access is denied. If access is denied to the officer, they can break and open the lock, and they can stretch any person who is coming into house and going out of house. Any person they can stretch, and they can seize the books of accounts, they can seize the other documents. So these are all the powers available with the officer. They can place the marks of identification. They can place the marking when what are the items that were already stretched. They can make the markings, and they can make a note of inventory. If business premises they are going to come for stretch, they can make a note of complete inventory available. If SSE fails to provide facilities to the officer, that means if assessing officer, that means the stretch officer comes to the premises, SSE is going to object them for their entrance. If SSE is going to object the officers, then imprisonment to the extent of 2 years and fine. So the thing to be noted here is, SSE has to give access. If SSE does not allow the officers to enter into the premises, imprisonment may be levied for 2 years. And bullion, jewelry, if this is the stock in trade, generally if the stock in trade will not be seized. Generally undisclosed assets shall be seized by the officer and taken to the department. But if it is a stock in trade, they shall must make the note of the inventory. This is called as deemed seizure generally. They will make the note of the inventory. So all the things that were seized will be power to search other places also. Sir, unless specified in search warrant, they should not search other places of the SSC. So in consequence of information, any officer has suspect that any books kept in any building not mentioned in the authorization. If they have given authorization for building A, but after entering building A, now they have a doubt that documents may be presented in building B. Now it requires the officer's approval immediately. Immediately they should specify either by way of mobile, whatever may be. They had to intimate to the higher officials. They have to take immediate approval. Then only they can enter for other building. Unless approval is taken, they cannot enter into the other building without approval of the higher officials, is the conclusion I am going to give you here. If officers require, they can take the assistance of police also, and they can examine on oath the question asked by the officers to the SSC. He has to answer the questions on oath. That means correct answers must be given. Other information, any information which is useful for the purpose of Income Tax Act. There were certain expense bills which were raised in dummy expense bills were being raised by the SSC. It was found in the course of search whether they can be seized. Yes, any information which was required for the purpose of Income Tax Act can be taken up here. Okay, next, names specified in the authorization. So here they are going to specify officer names in the authorization. Who can go for search? Only they can only be come for the search assessment. And in case of search assessment, the thing to be remembered here is presumption. Sir, difference between assumption and presumption is, assumption, SSC need not prove it. Officer is going to conclusion that he assumes that it is the income. But whereas the term that here we are going to use is presumption. Presumption means SSC proves assessing officer is going to leave them. For example, there is a document which was registered for 5 crores in the premises in the name of friend Mr. B. If search is made in the premises of Mr. A, but there is a document in the name of Mr. B, a property document for 5 crores. Now what the department presumes is Mr. B is the benami of Mr. A. Whether department can think like that? Yes. Presumption with respect to search. Any books of account, documents, money, bullion, jewelry or other valuable article which was found in the course of search, they believe that it was true. They believe that it was attested, executed in the name of this SSC only. And every signature and every handwriting belongs to SSC only. This is the presumption they are going to take. They shall assume that everything belongs to SSC only. Now it is part of the SSC to prove that, but these presumptions are rebuttable. What do you mean by the term rebuttable? Means if SSC proves, then they shall leave the SSC. They are only rebuttable presumptions is the conclusion I am going to give you here. Next thing here is rights of the person under search. What do you mean by the term right? Here right of the person under search, that means as of now we have discussed powers of the officer, but now I am going to discuss the right of the SSC. Sir, if you refer here, I have completed this point now, powers of the officer. Now I am entering into this point, rights of the SSC. Sir, the procedure relating to search I have divided it into 3 pages. In these 3 pages, I have completed powers of the officer. Now let me enter for rights of the SSC. Coming to rights of the SSC, they have right to see the warrant of authorization. They have right to see. SSC have right to, whenever officer enters for search, please disclose me search warrant once. SSC can ask. So he has right to see the warrant of authorization. Number 2, he can verify the identity of each member. ID cards of each assessing officer can also be verified by the SSC. And next, he can make personal search of all the members. Before execution of search, first SSC can search the officers, whether they are going to bring any elements like pen drive or any other gold biscuits. They may bring and they deposit in a lock in a cupboard, and they may specify that it belongs to SSC. So assessing officer may also cheat the SSC. For that purpose, first SSC can search the officers and then officers will search the SSC. insist of at least 2 respectable witnesses. Very, very important aspect is before commencement of search, 2 witnesses presentation is mandatory. 2 witnesses should compulsorily be presented. Okay. So at least 2 respectable and independent witnesses must exist. And if any emergency exists, medical practitioner can be SC can make a call to the medical practitioner also. So these are the rights available to the SC at the time of search. Okay. And to allow the children, if SSC has children and they want to go to school, so they have to allow. Sir, what the thing I am going to present to you is rights of the SSC. SC has such right. Okay. And to have a facility, they can take the meals in time and they can inspect the seals, the things they are going to seize, they can inspect it. And every statement given by the SSC, they okay. Coming back to our discussion here, the thing that was specified here is in case of stretch assessment, first the thing to be noted here is Panchnama. So in case of Panchnama, first initially the list of books which were seized has to be identified. So from which place to which place, how many books were being seized, the place of marks of identification has to be completely recorded. And then to be done here is inventory of the cash found. How much cash has been seized should also be presented here. So the exact location where the cash is being found, bundle number, denomination. So in 500 rupee note or 100 rupee note, whatever may be, denomination has to be presented. The number of pieces, how many cash pieces have been founded, and what is the amount of cash that was seized. Sir, Panchnama is nothing but complete record of the details. So in these details, inventory of the cash found, cash seized out of the above, among the cash found, how much cash is being seized should also be presented here. And next thing that was here is order of seizure. So like this, Panchnama has to be compulsorily executed. Okay. So in continuation of my discussion here, to have a copy of Panchnama is nothing but the list of things that were seized. That Panchnama copy should also be obtained along with annexures. Now we have discussed annexure regarding cash, inventory. They has to be compulsorily executed. And to have a copy of any statement that is used against him by the department. So have a copy of such search warrant, they can obtain the copy. And they can obtain the copy of seized books of accounts. So that even after completion of search assessment, within 30 days, SSC has right to collect back the assets which were seized. Okay. And SSC is right with respect to books of accounts. SSC have right to take the copies. SSC have right to return back the books after completion of the search assessment. And duty of the person. Sir, as of now we have discussed it regarding rights of the SSC. Now comes to the duty. If you refer our procedure, we have completed powers of the officer, rights of the SSC. Now comes the third topic, duty of the SSC. It is the duty to allow free and unhindered ingress into the premises. He has to allow the assessing officer to make search. He should not object them. If SSC objects, if you remember, imprisonment up to 2 years along with fine may be levied. So he should not object them. Okay. And next coming to other thing, to see the warrant of execution and put the signature. SSC must compulsorily see the warrant and put a signature on it. Okay. And to identify all the receptacles placed, to explain the ownership. When any assets were being seized, SSC has to explain the ownership. And he has to explain every relationship with the person in the premises. In premises, how many persons exist and what is the relation with them, and everything has to be disclosed here. He should not encourage unauthorized person into the premises. So after execution of search initially at the premises of the SSC, whether auditor can attend here? Yes, if authorized. Unauthorized persons cannot enter. If department authorizes, they can enter. Okay. and not to remove any article without notice of the officer. Nothing, no article must be taken out of the premises. To answer all the queries truthfully. So these are the duties of the SSE. He should answer all the queries which were raised by the officer truthfully. And in Panchnama, SSE should also sign. Not only officer, SSE should also sign. And this is a very important thing, but which cannot be maintained practically. Peace has to be maintained until the completion of such assessment. But practically speaking, SSE get tension, he may shout, so whatever may be. But the thing that was theoretically presented here is they must have peace until the completion of the assessment. Similar cooperation must be extended till the stretch is completed also. Okay. And next thing, procedure for seizure. So two respectable witnesses must exist. Okay. Attendance of occupant, SSE must exist or his representative, or if in stretch is made in a guest house, at least in the presence of watchmen, they need to make the assessment. Attendance of the occupant is compulsory. And list of the possession, Panchnama has to be prepared. Place the seized things in packages. They have to separately place it in a package, and they have to place identification marks, and copy has to be given to the officers, and one copy has to be given to SSE also, if you remember. And next thing to be noticed here is, sir, this stretch assessment we are going to divide into two parts. One at the time of stretch, next at the time of assessment. Up to now what was completed here is, stretch has been completed. Books of accounts, mobile properties, immobile properties, stock in trade, they have been seized. Department is going to seize them. If it is a stock in trade, thus they are making to make a note. If it is not the stock in trade, they are going to seize them. And a Panchnama shall be prepared and given to the SSE. And after that, the thing to be noted here is, if officer authorized for stretch and assessing officer were same, or if they were different. Sir, up to now the thing that was completed here is stretch. But now the thing we are going to discuss here is stretch assessment. If you remember, stretch warrant is executed under section 132. But now we are going to begin stretch assessment under section 153A. What was completed as of now is just stretch has been completed, but stretch assessment is not completed. Now the assessment begins. Sir, stretch officer is different from assessing officer. If the officer who has conducted stretch, he is also going to conduct assessment. If both were one and the same, then directly the procedure begins. But if the both were different from each other, that means if officer who is authorized for stretch and assessing officer were different, both were different from each other, then the officer who has conducted the stretch shall hand over the document seized to the assessing officer. The officer who has conducted the stretch shall hand over the documents seized to the assessing officer. One thing I am going to note you here is, the person who conducted stretch and assessing officer were same, then the procedure begins immediately. But if both were different, now the assets which were seized will be handed over to the assessing officer. Now the stretch assessment procedure begins. As of now, what we have discussed is stretch at the premises of the SSE. But now stretch assessment is going to get begin. Now let us have a discussion regarding the stretch assessment procedure. Now AO will issue notice to furnish written of income. Sir, in past 30 minutes before, we have discussed regarding income escaping assessment, where notice should be issued to file the written of income under section 148. In the same way, now in 153A also, now they are going to issue notice to the SSE to file written of income for past 6 assessment years. In certain cases, plus 4 assessment years. That means for 10 assessment years, notice can be issued to file the written of income. Now past 10 years returns should be filed by the SSE, not 1, 2, 3. 10 years returns. Department can go back for 10 assessment years. So what is the procedure? Let me discuss. Before discussion of procedure, first let me present you a notice. If you refer here, notice under section 153A regarding stretch. After completion of stretch in the premises of the SSE, Now what assessing officer is going to do here is issue notice under section 153A. Notice under section 153A. 153A, if you refer in this case, 6 assessment years immediately preceding the assessment relevant to the previous year 9-10. This is an example where search is conducted in the year 9-10. Based on that, here we are going to conclude to you. The thing to be noted here is 6 assessment years. Last 6 years returns were to be filed by the SSE now. Past 6 assessment year returns should be filed now. If you refer here, past 6 years plus 4 years. What do you mean by the term 6 plus 4? Now let me give a clarification regarding that. First thing to be noted is handed over to the assessing officer within 60 days. So within 60 days, sir, if search officer and assessing officer were same, there is no concept of handover. But if they were different from each other, the search officer has to give documents and assets seized to the assessing officer within 60 days. They have to give back. And after that, the thing to be noted here is search assessment procedure. First, notice to be given to the SSE. Period of assessment 6 years plus relevant assessment years. That means 4 assessment years back also they can go. When they can go for back 4 years? Actually, last 6 years return should also be filed again now, disclosing such undisclosed incomes also. Why the search has been executed in the name of the SC? Because SC have certain undisclosed incomes. Such undisclosed income should be disclosed now, and along with such disclosure of last 6 assessment years return should be filed now. Along with this 6 plus 4, that means 10 assessment year return should be filed now. Online only. In online, at the time when the search was executed, attaching notice under section 153A. Here I have disclosed to you notice under section 153A. This notice should be attached and return has to be filed for 10 assessment years. When they can go for 10 assessment years, I am going to give you a clarification. Very, very important aspects are to all the chartered accountants. 50 lakhs or more. Let me take an example. First, let us clarify regarding this provision how to count this 6 assessment years. First, let me count such 6 assessment years. How to count them? If the search has been concluded today, the date is 16th May 2020. Okay, 16. So now how to count these 6 assessment years? Now let us have a presentation regarding that. This 6 assessment year count begins from the 16th May 2020. The recent ending year 31st March 2020. That means previous year 1920, 1819, 1718, 1617, 1516, 1415. Like this, 6 assessment years returns has to be filed by the SSE under section 153A, not under section 139. Under 153A, ITRs are one and the same, 1 to 7 ITRs only. Applicable ITR should be selected and past 6 assessment years shall be filed. Along with that, 1314, 1213, 1112, 1011 should also be filed if escaped income of this 4 years exceeds 50 lakhs is the conclusion. So if the escaped income during that 4 assessment years, if it exceeds 50 lakhs, in such a case they have to give notice for 10 assessment years. So generally in case of search, last 6 assessment years should be filed, but we can go beyond 6 assessment years up to 10 assessment years if the escaped income has exceeded 50 lakhs. Sir, for each year 50 lakhs or in aggregate? Aggregate for 4 years. If you refer here, aggregate for 4 years, it has to exceed 50 lakhs. Okay. And now the assessing officer is going to do is assessment by the AO. AO is going to assess such relevant assessment years also. That means 6 plus 4, 10-year returns should be filed by the SSE. We come back to our procedure. Now SSE shall file return of income of past 6 years plus 4 years. That means total 10 assessment years if SSE has filed return of income. Now department issues notice under 143(2). 143(2) means here not scrutiny assessment. Since return has been filed, such returns shall be assessed now. For that purpose, for attendance of the SSE, this notice shall be issued. For the purpose of attendance of the SSE, this notice shall be issued, is the conclusion. Okay. Now coming to the other aspect. If seized assets and documents belong to the SSE, if seized assets and documents belong to the SSE, I have already specified you that department takes a presumption that every document that was seized belongs to the SSE. But these presumptions were rebuttable presumptions. If SSE proves that it does not belong to them, then they shall leave him. But generally, presumption that if it belongs to the SSE, now assessment shall be completed. How the assessment will be completed? Now let us make a discussion. And if seized documents does not belong to the SSE, in such a case, section 153C begins. 153C, very, very dangerous section of Income Tax Act. If search has been executed in premises of Mr. A, where Mr. B documents were found, in hands of Mr. B, 153C shall be made. That means, in hands of Mr. B also, he is required to file returns for past 6 assessment years. If search has been executed in the premises of Mr. A, and where any documents belonging to other person have been found, any document belonging to other person have been found, in such a case, this document shall be handed over to the other person. If the AO of Mr. A records the satisfaction, if Mr. A's AO records the satisfaction, if it does not belong to, if it does not pertain to Mr. A, then these documents will be handed over to the Mr. B's assessing officer. Now Mr. B's assessing officer is going to start 153A on Mr. B. That means along with Mr. A, now Mr. B is also required to file returns for 6 assessment years. If last 4 years exceeds, then if last 4 years exceeds, then those assessment years also notice can be issued. So the thing to be noticed here is, here the notice can be issued for past 6 assessment years and also for additionally 4 assessment years in the hands of other person also. So this thing has to be concluded here. So one thing I am going to present you here is assessment by AO. Okay. What do you mean by the term assessment of other person? When initially assessment has been made in the name of one person, and during the course it was found that this document does not belong to SSE and belongs to other person. In such a case, other person's assessment shall also be made. Other person will also be assessed under section 153A is the conclusion. Okay. So next thing, let me present you regarding abatement of pending assessments. Sir, here last 6 years we are going to make assessment, in which in second year scrutiny assessment is pending. Okay. And in fourth year income escaping assessment is pending. Since in all the assessments we are going to compute total income only, when search has been executed, all the pending assessments shall be automatically withdrawn. Shall be automatically withdrawn. They shall be taken back. All the pending assessments shall be closed. The thing that was presented here is abatement of pending assessments. Whenever search has been executed, pending assessment shall be cancelled. But when search is cancelled, then the closed assessment shall be revived. In yesterday's session, I have presented revival topic. When stretch has been executed, pending assessments will get closed. Okay, but when such stretch has been cancelled, again closed assessments will get reopened and a fresh time limit will be given to them. That's what in yesterday's session itself we have discussed. What is the rate of tax for that assessment years? The rate which is applicable for that year only, even though stretch has been executed in current year, whether current year tax rates will be levied for last 6 years, no. Respect to assessment year will only be charged. Okay. And next, coming to section 153C. Sir, 153C is the assessment or reassessment of the income of other person. When stretch was executed in the hands of one person, where documents, money, bullion belongs to, pertains to, or relates to another person's AO, and assessing officer is satisfied that, the term to be remembered here is assessing officer is satisfied that money belongs to, books pertains to, information relates to other than the person referred in 153A. If stretch is executed in the hands of Mr. A, but in A's premises documents belonging to Mr. B has been found, in such a case, upon satisfactory note prepared by the assessing officer, it shall be handed over to the AO of other person. Now these documents will be given not to Mr. B. Mr. B assessing officer documents will be handed over. Now what that other person assessing officer is going to do is execute the provisions of section 153A. Very important thing to be noted here is that other person, very dangerous provision, sir. Even though stretch is begin in the hands of Mr. A, now Mr. B also required to file returns for last 6 assessment years. So every person document has to be maintained by them only. If we are going to give to other persons, like this stretch assessment shall be made on such other person also. Even though other person has not filed return, even though return has been filed, or even though assessment has been made, whatever may be the criteria, in hands of Mr. B also, now the stretch assessment will get continued. But for this purpose, the thing to be remembered here is satisfactory note. If Mr. A assessing officer returns in writing, if they prepare satisfactory note, then only this document will be handed over to Mr. B assessing officer. Now Mr. B assessing officer can begin section 153A on him. That means Mr. B is also required to file past 6 assessment years is the conclusion. And now we are in the last phase regarding time limit for completion of the stretch assessment. Last we have discussed the time limit for completing income escaping assessment. Now we are going to discuss time limit for completing the stretch assessment. Stretch assessment has to be completed if stretch has been executed prior to 1819. Before 1819, if stretch has been executed, within 21 months it has to be completed. 21 months has been given. For stretch commenced before 1819. Okay. But stretch during 1819, 18 months time limit has been given to complete the stretch assessment. And where the stretch has been executed on or after 1/4/2019, now this limit is only applicable. Stretch assessment should be completed within 12 months. Of course, in COVID situation, extension of 3 months is given. That is not the criteria. We are interpreting the provisions initially. So based on that, I am going to give you a conclusion that for authorizations, that means stretch warrant, which was executed on or after 1/4/2019, now the time limit that was specified here is 12 months after the authorization executed from the end of the year. If today the authorization is given, from this year ending, that means 31st March 2021, from that date onwards within 12 months, that means within 31st March 2022, this stretch assessment should be completed, is the conclusion. But if international transaction exists, we are going to repeat this term again and again. If international transactions exist, an additional time limit of 12 months will be given. Okay. Next, 153C, that means assessment of other person. Sir, this is the time limit for completing assessment under 153A. Mr. A, in my example, Mr. A assessment has to be completed within this time limit. But now coming to assessment of Mr. B. Mr. B assessment, when it should be completed? Before Mr. A assessment concludes, or an additional time limit of 9 months has been given, whichever is later. The thing that was specified here is not whichever is earlier, whichever is later. Section 153C, the time limit under section 153A, that means this time limit 12 months or an additional time limit of 9 months upon receiving the documents by Mr. B assessing officer. From that date onwards, 9 months has been given. But for finance year 18-19 and thereafter, 9 months has been extended to 12 months. So like this, the time limits have been given for completing the assessment. Time limit criteria, what is the meaning of time limit here? Means before that end date, the order must be issued. Assessment order must be passed by the officer. Even though receipt may be later by the SSE, order has to be passed by the officer before that date is the conclusion. Okay. Next, if reference is given to TPO, additional time limit of 12 months shall be received. Okay. This time limit has to be begin from the conclusion of the stretch. From the conclusion of the stretch, this time limits has to be obtained, is to be executed, is the conclusion. Now coming to next aspect, application of the assets. This is very important aspect. When department is going to return back the assets to the SSE, when they shall return back. Now let us have a discussion on this aspect. Generally, all the existing liability will be recovered by sale of such asset. If there is a cash, they shall recover it immediately. If there is a jewelry, they are going to sell them and recover the existing liability. Advance tax cannot be recovered out of the assets seized. Only existing liability can be recovered is the first point. Okay. Coming to second point, release of explained assets. Very, very important aspect. Okay. Let me present this with an example. If today's stretch has been completed, 16th May 2020. If today's stretch has been completed. Okay. Now the thing to be remembered here is, if today's stretch has been completed, within 30 days, 14th June 2020, SSE have to, within 30 days, SSE have to apply for release of the assets. Sir, now I am discussing time limit for release of the assets seized. SSE has to apply by 14th June. Within 30 days, if SSE applies, then within 120 days, they are going to release. This 120 days should be calculated from this date. If SSE applies within 30 days to release the asset, department releases within 120 days the asset, provided in this gap SSE has to give complete explanation. The ownership has to be completely explained by the SSE. Ownership, if it was completely explained, then only they are going to release the excess assets. That means after retaining the tax portion, excess assets will only be released by the officers. This is very, very important aspect practically. Release of explained assets after retaining tax portion. Tax portion shall be retained and excess assets shall only be returned. Here the thing that was specified here is within 30 days. If SSE is going to apply, then within 120 days they are going to release. Generally this 30 days is to be interpreted from the end of the month. That means in my example, if we continue, application can be made from this month ending, that means 31st May 2020 to 30 days. That means up to 30th June 2020 you have a time. This 30 days limit is to be counted from the end of the month. If we by 30th June, if we are going to apply for release of the assets, then department releases the asset within 20 days, 120 days is the conclusion. Okay. Next, if they do not return back within 120 days, then they are going to add interest at the rate 0.5%. Interest at the rate 0.5% will be added and returned back to us after the expiry of 120 days. So the thing to be noted here is release of explained assets only. Unless SSC offers complete explanation regarding complete income details regarding such asset, it shall not be released. If the SSC gives complete explanation, then only it shall be released. And now coming to last point, penalty. And after that, the queries that were raised here, I will solve it. Penalty under section 271 AAB. Very important aspect in case of stretch assessment. Penalty, it's not a very lower thing. The penalty is very high here. If SSC admits the undisclosed income, sir, 4 conditions were specified for lower penalty. Penalty under 270A, penalty under 271 AAC will not be applicable in stretch cases. In stretch cases, the thing that was specified here is SSC has to admit the undisclosed income. First, how much is the undisclosed income he has to admit. He has to substantiate the manner, how he has earned. Manner has to be substantiated. SSC has to pay tax along with interest and file his return of income. Last 6 plus 4, we have discussed 10 assessment years returns has to be filed by the SSC. 4 conditions have been specified here. Admission of that income, manner of income, pays the tax along with interest, files the return of income. If all these 4 conditions were satisfied, say cumulative conditions, all the 4 conditions must be satisfied, then 30% of income shall be levied as penalty. If 1 crore is violated, that's not tax amount, income of 1 crore is violated, penalty of 30 lakhs will be levied. Penalty of 30 lakhs will be levied. So that means the thing to be noted here is, if SSC furnishes the return of income declaring such undisclosed income, then 30%, if all these conditions are satisfied, then 30%. When any of this condition is violated, then 60% of income shall be levied as penalty. So tax is common. Along with tax, an additional penalty shall be levied. How much penalty shall be levied? 30% of undisclosed income to 60% of undisclosed income shall be levied. 270A penalty will not be imposed here. In case of such cases, a separate penalty has been given in section 271 AAB. How the penalty shall be levied? Approval of higher officials. They were common, the same thing. There is no new procedure. Here, how much is the quantum of penalty is the question. That is what I have clarified you. Minimum 30%, maximum 60%. Fixed. This is not the amount which can be varied based on officer's discretion. This penalty quantum has been fixed. Now in section 270A, the penalty is fixed, 50% of tax. In fraud cases, 200% of tax. In the same way here, penalty under section 271 AAB is also fixed. How much the penalty is? If completely SSC is going to admit the details, 30% of undisclosed income. If SSC does not admit the details, 60% of undisclosed income shall be levied as penalty. So by this we have completed our discussion regarding assessment of stretch. This penalty proceedings, now assessment proceedings were completed and then penalty proceedings under 271 AAB. Sir, this such assessment procedure I have presented in the first 3 pages. Based on that, we have made a complete discussion on this section 271 AAB onwards up to such section. Complete discussion has been over. And now let me solve the queries and conclude the session. So here coming to the queries. Sir, explain about fair market value on 31st March 2019 for cost of acquisition, why we should treat cost of acquisition and how much long-term capital gain is to be computed. Sir, fair market value on 31st January 2019, not 2019, 2018. Finance Act 2018 has specified that on sale of listed equity shares with effect from 1/4/2018 onwards, if listed equity shares were sold, earlier there is exemption under section 1038. But now section 112A has given that in excess of 1 lakh, 10% tax is to be levied. But government, for our benefit, they have specified that accumulated benefit up to 31st January 2018 shall be foregone. For that purpose, if any share has been purchased before 31st January 2018, fair market value on 31st January 2018 will be taken as the cost of acquisition. So that for that purpose only it has been denoted, not 2019, it is 2018. Okay. And next thing is, sir, please explain the difference between notification, circular, press release, SOP issued by the department. Sir, notification will be issued by the government binding on all the persons. What about circular? Circular is meant for clarification. Circular is meant for clarification. To clarify the provisions of Income Tax Act, they are going to issue circular. Generally, circulars are binding on the assessing officers, but not on the assessees. But since it is a clarification, generally assessees will also follow it, but it is not mandatory. Press release, in order to bring immediate application, they are going to release press release. Sir, all were part of income tax law only. Okay. And next thing is, sir, we can call our lawyer or chartered accountant before signing declaration. No. First, we have to sign the declaration. Search warrant, we have to sign it immediately. After that, you can call for a lawyer or a chartered accountant. If search is done, does it mean compulsorily lead to block assessment? Yes. Block assessment means 6 years plus 4 assessment years. That means total 10 assessment years. 4 years only if escaped income exceeds 50 lakhs for 4 years in aggregate. Okay. Block assessment is mandatory once search is executed. Search assessment procedure under 153A is mandatory. Okay. Next, within how many days such official has to hand over to assessing officer? I have already specified. Within 60 days, it has to be handed over to the officers. Next, SSE is entitled to claim exemption under section 54F on all the 8 flats if building allotted by developer. Okay, there is a reference of this case law. Okay, sir, it's a different issue. It's just a ITAT tribunal judgment. Whether tribunal judgment is binding on us, we can use the facts. And if our assessing officer objects on our case, based on that case we can go. But actually, based on interpretation of the provisions, I have made a discussion. There may be certain controversial judgments. Based on the practice, we can follow them. But when the officer objects, we can go through it. If we need a complete discussion on this case, we shall discuss in next session. And other thing that was denoted here is, documents are seized by officer. Can a copy thereof can be claimed by the SC to claim it revised return? Yes, documents can be asked. SC has right. I have already discussed here the rights of the SC. In this rights of the SC, rights with respect to books of accounts, I have already clarified you. Once again, let me disclose that rights available with respect to books of accounts. Yeah, here it was rights with respect to books of accounts. He has right to take the copies. Okay. And next thing is, sir, an SSE is NRI at UK. They reopened under 148. Authorized CA as authorized representative. Plain paper okay or stamp paper? Notary or certification is mandatory. Please clarify the practical sessions. Okay. Generally, the thing we execute in white paper or notary, it is based on our practical facts. Income Tax Act does not specify any condition that authorized representative has to be in a stamp paper only. Income Tax Act has not imposed such condition. It is based off our requirement in future. If we want to go legally, for that purpose only they are executing it. But for the purpose of Income Tax Act, there is no such condition. Okay. Next, whether appeal can be preferred against such order? Yes, any order, appeal is preferable. If SSE do not satisfy with the assessing officer's order, he is not ready to pay such taxes, he can go for appeal. First appeal to CIT appeals, next ITAT, High Court, Supreme Court, this option is available. Difference between penalty under section 68 and 68D and section 132. Okay. Sir, that section 68 to 68D in the course of regular assessment under section 271 AAC, 10% penalty shall be levied. In part of scrutiny assessment, 10% penalty shall be levied. If the same section 68 to 69D is executed in stretch assessment, then 30 or 60% of penalty shall be levied. So, sir, one thing I would like to clear you that in section 68 to 69D, tax rate of 60% is fixed. Okay. What about penalty? Penalty at the rate 10% or 30 or 60% is the discussion. In the course of scrutiny assessment, if officer uses this section, then 10% penalty under section 271 AAC. In the course of stretch assessment, if these sections were used, then penalty of 30 to 60% shall be levied. Sir, tax amount is fixed. What about penalty? Is different based on the assessment, based on the type of the assessment. Here penalty shall differ. Okay. And next question that was here is, SSC had admitted undisclosed income, whether section 115 BBE will be revoked. Sir, admission has to be done before issuance of notice. After issuance of notice, assessing officer cannot specify, cannot give you an opportunity to disclose them. You need to disclose at the time of filing written only. Later at the time of assessment, how can you use section 68 to 69D? We cannot object them. So everything has to be taken care at the time of filing return of income, not at the time of assessment. Okay. Next. Sir, if land was acquired by APCRDA, you told that entire capital gain is exempt. What if the proceeds were used for other purpose? Sir, here proceeds is not the criteria. APCRDA Act, any land has been acquired by compulsory acquisition, it was exempt. Utilization of such fund is not the criteria. It was completely exempt under 1037A. 56 exemption we need, 54 exemption we need to invest. But this exemption under section 1037A we need not invest. It was completely exempt for any purpose. Sir, the withdrawing of pending scrutiny cases is applicable for survey under 133A. No. Whenever survey under 133A is being made, it automatically officer converts it into scrutiny. Every survey case they will automatically convert into scrutiny. So here dropping of proceedings is not applicable. SSC's right of drop of proceedings under 152 section 152 is applicable only in income escaping assessment case, not in stretch cases and scrutiny cases. Sir, how to interpret place laws? It is upon our personal devotion, sir. You come back and back, if you read the cases, you will automatically learn the interpretation. Okay. Next, in case of survey under 133A, how many back assessment years scrutiny can be carried out? Sir, scrutiny is applicable only for 1 year. If officer wants to go back for previous years, then 148 notice will be issued. For the year in which survey has been made, they will select for scrutiny. For past years, they will go for income escaping assessment. Okay. Next, whether notice under 153C, okay, whether notice under 153C can also be issued for additional 4 assessment years beyond. Yes, if 50 lakhs is evaded, not only in 153A, in 153C also, department can go back for 10 assessment years. Okay, not only for 153A, 153C also. Next, STT is different concepts. Or securities transaction tax is not a part of income tax, it's a separate aspect. Next, in assessment of all the physical books has to be given or copy will do so. Sir, we have to hand over original to the department. We need to take copies. All the books of account should be handed over. What is TPO? TPO means TPO stands for transfer pricing officer. In case arm's length price exists, practically from department point of view, assessing officer is going to determine ALP. Like valuation officer, department has TPO, transfer pricing officer. If reference is given to them for the purpose of assessment, an additional time limit of 12 months will be given, because to compute arm's length price, various facts have to be drawn back. For that purpose, if reference is given to TPO, transfer pricing officer, to determine ALP, an additional time limit of 12 months is given there. Okay. What is the difference between search and survey? Sir, survey will be converted into scrutiny, whereas search will be converted into search assessment under 153A. Survey department can go for survey without reason to believe that SSC has undisclosed income. Generally, when reason to suspect arises, they can go for survey. Survey requires the approval, okay, but in case of survey, they convert them into scrutiny assessment, and survey is lower than search assessment. In search assessment, past 6 assessment years is required to be filed, but in case of survey, the year in which survey has been conducted, they shall convert into scrutiny. If past assessment years they need to issue, they will go for income escaping assessment. Finally, what I am going to give you is, in case of survey or search, department rights were one and the same, but on part of SSC, number of assessment years will get different for search and survey. Survey can be made without any reason to believe, department can come for survey, but search only if reason to believe exists, then only they should come for search. Okay. Next, notice under section 133(6). This is power to call for information, sir. You are asking section 133(6). This is power to call for information. This is completely different. 133(6) may not be converted into scrutiny, may not be converted into search. If department requires any information from you, they will use notice under 133(6) and they will call the information from you. Okay. Next, difference between search and survey. I have already explained now. Sir, if possible, arrange one session regarding interpretation of statute. Okay, we will plan it at a later point of time, sir. Regarding interpretation of statutes, how to interpret a case. Okay, we will deal it at later point of time. Next, sir, please recommend your textbook for the subject which contains the case laws for exam and future reference. Okay, reference is not the criteria, sir. Where this PDF is available, I have given a contact number in description box in Google Drive. You can contact that WhatsApp number so that I will share the publications. Okay, so by this, all the queries that were raised here were completed, and in tomorrow's session we are going to discuss much more important aspects. Okay, so by this we are going to conclude the session today. So thank you very much.